obviously it didn't take long for Michael Saylor to speak up, and how we have our next Bitcoin president, and how the United States now needs a strategic Bitcoin reserve. So things are looking pretty good. But for Michael Saylor, regardless of who's president, he's been having a lot of success with MicroStrategy. Up 264%. This is as of about a week ago. And there's a specific strategy that Michael Saylor is applying when it comes to MicroStrategy. And it's something that we can also apply. And we're not going to be able to replicate the same results. But there's some really important takeaways there that we can apply towards the next presidency to have somewhat of a success. And that's exactly what we're here to discuss. I'm joined by Patrick, also known as Crypto Rookies. We're going to talk about what exactly is Michael Saylor doing when it comes to MicroStrategy, and what are some takeaways that we can apply for our personal portfolio.
A business that is publicly listed on the stock market, like what he has, and at the size that he has access to some tools that people like us don't have access to. But we can still understand how he's doing it and replicate this model with less capital efficiency, but still good return compared to just owning Bitcoin alone. Because what it doesn't involve trading crypto. And as you know, you've tried to play with trading crypto, and more than 90% of traders lose money. So it's very risky to buy in, sell, and like play the up and down game. But his model doesn't require that. Essentially, he never sell his crypto at all. So, but he's using leverage, and that's basically what we can explain now. To that it still work. It's not as like you don't get as much return, but it's much safer in a sense.
So first of all, let's kind of briefly explain to the audience, when you say leverage, how does leverage work in traditional finance or cryptocurrency?
Yeah, typically is let's say that you want to buy something, you can get a loan to get it. And then let's say that you're buying some sort of asset, like or even a company. If the rate of growth on the return on investment of that investment is greater than the interest rate on the loan, it's you're getting improved financial efficiency because you're getting higher return compared to not taking the loan itself. So like it could be done, for example, even real estate. Let's say that you get a mortgage at, I don't know, like 5% per year. But then the price of the house is increasing at 10% per year. You could just keep doing that. You're getting the leverage is basically getting the loan to get a bigger position size because you don't have the money to buy everything up front, basically. So that's kind of what he's doing in this case.
All right. It is a riskier strategy, of course, but I guess if you're of the mindset that you have a lot of conviction, a lot of confidence that Bitcoin will continue to go up, then that is a scenario where you could apply some leverage. Is that correct?
Yes. And I think in the case of MicroStrategy, he has two different kind of strategy that works that he used depending on the market condition. One is that he used convertible debt, and the other one is that he can just sell equity directly. So, and that depending on the market cycle. So when let's say the price of MicroStrategy is overestimated, then he can maybe just sell equity at that point because it makes sense. And meanwhile, if he feels that the equity is undervalued a little bit because he feels that the Bitcoin price is going to increase significantly in the next little while, what he can do is just use a convertible debt that will mature in the future at a specific time point. The convertible debt, the way it works is that you're getting a loan now with a very low interest rate or even 0% interest rate, but then at the maturity date, it will convert into equity. But that means that let's say that you have a maturity of 3 years, let's say. You can basically bypass entirely the bear market, and then next bull market, when the price of Bitcoin is much higher than it is now, even higher than the current bull cycle, that's when it matures. But then MicroStrategy, the stock itself, will have increased massively in value, and then you just pay at that point in time. You may have a discount of some sort and things like that, but that means you don't have to worry right now to pay capital repayment on the loan itself. So that's why it's so good. And that's in this case, you just need to make sure that the maturity happen to be not at the worst part of the bear market.
obviously a lot of people watching this saying, okay, look, I'm not Michael Saylor. I'm not MicroStrategy. I don't have a company. I'm just somebody that is trying to buy some Bitcoin, trying to get into the market. Can they still play the game?
Yeah, that's thing. I'm doing it in two different fashion right now, so I can show a little bit some of the results and how it works. I'll share my screen. Okay, so one way to do it, let's say it's AAVE. It doesn't have to be AAVE, but this is a decentralized kind of a peer-to-peer lending protocol. So why I'll choose AAVE compared to other peer-to-peer lending protocol is because in this case, you don't have to pay the capital on your loan. You just pay the interest rate every day. So that means I can keep my loan active for many years without having to pay back the capital. In theory, I may not even have to pay the capital at all. And that's what's interesting about MicroStrategy. And in this case is that you're taking a loan, let's say on USDC or USDT. Right now I'm using both. But we know that over time, government print money and there's a currency debasement taking place with inflation and all that stuff. So if I never have to pay back my capital and I just pay the interest rate, but my growth of capital, let's say Bitcoin, is increasing faster than the loan, that means it's, like it's kind of like something that does something like that. So you end up having your asset that is growing, that you value, that is growing faster because your currency get debased, so it actually lose value. So your loan end up costing you less over time on the period of time. So it's kind of a melting ice cube, like the government fiat currency like this. So in this case, I took, you see, I bought for $31,000 of Bitcoin, and I have $15,000 of borrowed money that I used to borrow USDC and USDT. And then I went to buy back more Bitcoin, which I supplied back into this to increase my capital, my collateral. So you just have to make sure that your L factor and your kind of a LTV, like basically your collateral, is in good position to not get liquidated. And then in this particular case, like if you want to see the formula, is basically I have a loan of $15,000, and then that's your debt, and then you divide by your asset. Your asset you have to maintain 75% of your collateral to be in good shape, because you cannot take a loan of 100% of your collateral. So for me, I think we can get a little bit above that, but for me, I picked 75 just to be having a little bit of extra buffer. And then the 0.42, that's the number of Bitcoin that I have. So when you do that simple formula, I end up that my liquidation price would be $48,000. So that means unless Bitcoin goes back down to 48K, I'm safe here. Technically, I could take more loan, but I'm waiting just for the price of Bitcoin to grow. Then I take a little bit more like loans, and then I buy a bit more. So I can keep playing the game like this. And the fact that I'm taking the loan to just buy back more Bitcoin and I re-inject it as collateral, that means that I can really increase both in parallel quite a bit. Because originally I didn't put 15K of capital, I think it was 5K at the beginning. But I was able to take the loan and buy back more Bitcoin. And since I started doing this, the price of Bitcoin has increased. So now my collateral is increasing and all that stuff. That in a sense, I'm more than doubling the amount of Bitcoin I can own right now by taking loan and buying more. And then because I'm buying more, it's acting as collateral so that I can take more loan. But you just need to make sure that you can suffer, I would say, in the worst of like during the bull cycle, the markets sometimes crash 30 to 40%. So you have to be able to absorb that. So in my case, right now we're at 75K, and I can go down to a 48K. So let's see. So I can calculate, let's say that it's a 40% drop at the worst case. So that would bring the price down. If a 40% drop, we would go down to $30,000. So I would be at risk in this case. But I'll explain how we can fix that risk with options. And I know you're aware of options, so that's where I think it would make sense to take an option if the price of Bitcoin crash, where the option value that you collect end up being enough to cover, to buy more Bitcoin while it's going down so that you can add to your collateral. This way, you can actually push from 48K down to below 30K. So that's one way to reduce the risk of that. So you can take some of the loan of USDT, and instead of buying more Bitcoin right now, you can basically buy options that are about the price of Bitcoin going down to protect yourself and edge. But with that said, I wanted to show you something is that the thing, so during a bull market, you can see dips between 20 to 30%, sometimes 40%. But what you have to be afraid of is when the market crash in the bear market. Okay, so this, for example, was the all-time high in 2017, and then the market crashed from this point to this point. So that was an 85% crash here, like about 84%. So this is what you would use the option. And right now we are not at the peak of the bull market. So, but assuming that we go to maybe, let's say 105, and let's say that you want to absorb a 80% drop. So that means that the price would go back to 20K in this case. So you need to make sure that you optimize your options to be able to absorb that decrease if you want to keep your loan active for many more years, more than one cycle. So this is what you have to worry about with this strategy. And I think that the 80%, I would say this cycle will probably, when it crash, I would assume that it will be less than 80%. I would expect maybe a 70% drop or even less than that. But just to be safe, it's better to assume the worst. Because also, like, it's pretty consistent every, like you see if the bull market of the previous one, we went back down 87% also.
A lot of people are saying that we won't go down below 70K because usually, or if history repeats, whatever the amount of the Bitcoin is during the election, that's usually the bottom. I don't know how true that is, but if that case was to be true, then 70K would be the lowest.
I agree with that. And the reason is because I believe the peak will be around 240K. So if I take my ruler and I go for 240K down 80% or 70%, like let's 70% would bring us down back to 70K. So I think that is very much in line with what I believe.
So if you were to start today with Bitcoin being at 73, 74,000, and we're anticipating, you said 240K would be the top of Bitcoin this cycle, you would be able to double your Bitcoin accumulation during that period.
Yes, and the thing, what I'm not sure about is whether or not we're going to really see a bear market or not, because we could go on for a bull market for the next 8 years. Because in the past, the bear market was related to the halving and the, like some other business cycle and all that, the various pump and dump happening. But in this case, we have those gap rules, we have the ETF, and like a pension plan don't play the game of selling. MicroStrategy is not going to play the game of selling either. So I think it's not impossible that we're not going to suffer a 70% drop. Maybe we're going to see a 30% drop. But I think that maybe we will be surprised and maybe we'll see a 8 years stretch just going up with dips along the way from time to time. But I'm not sure we'll see a 70% or 80% drop this time around. Not on Bitcoin. I'm not convinced of that. So we'll see.
Got it. Okay. So we're applying the strategy to accumulate more Bitcoin using AAVE. I believe you also applied a very similar strategy to, was it BitKet? Is that correct?
Yeah, I'm doing it on Bybit.
Bybit.
So I started off in this case with $90,000. I bought a lot of Bitcoin, and then I took some like a margin account, and I bought some more Bitcoin. And then right now the capital is worth 218 out of 90. So that's a growth of 32%. But if you look at the price difference of Bitcoin, I started off buying at 59K. Now it's at 75. So that's an increase of 26%. So in this case, I was a bit afraid that Kamala would win and some other war scenario and all kinds of stuff. So I didn't go heavy on the leverage. But as you can see, I still increased my rate of return from 26% to 32% in the time frame. That's an increase of 25% extra of capital efficiency. So if you consider that right now the average return of Bitcoin for the next predicted stretch of maybe 5 years or so will be around 40% CAGR, like per year on average. That means that an extra 25%, you're going from 40% return per year to maybe 50% per year. That's an extra 10%. It's quite acceptable. And this, my liquidation price on this one, the price of Bitcoin had to go to 18K. Because I would think I really, the goal is the margin. I put limit buy order to buy Bitcoin at a much lower price, even back down to 34K. So now I changed that because now I think it's time to go more risk. So now I have a much bigger capital. I have more than twice my capital. So that means that I'll be able to increase probably maybe double the amount of return. So instead of growing 26%, I may be growing like 52% in the same time frame. Like if it continue growing at that speed. So the thing is, and in this case, the thing I will have to take options to protect against the downside. But the thing, you can do that on centralized exchange, and you can do that on decentralized peer-to-peer lending protocol, basically. So just one last note on AAVE. Right now, the interest rate on the loan is around 10%. But in the worst time of the bull market, this is probably going to shoot up, but it's a variable rate. So sometimes it's around 5% per year, sometimes it's 10%, sometimes it's higher. But I think it will average probably around 10% per year. So it's a bit high for a loan, but then again, if Bitcoin is growing at 40%, you have basically a free 30%, so on average. So you just have to make sure that you don't get liquidated with what I said with taking some options and stuff like that. The other part that is interesting is I know in the US and Canada and some industrialized country, mortgage rate is very low. But in country, for example, like Indonesia, if you want to buy a house, the mortgage is around 10% per year. So that's very high. In which case, then I would suggest not to go to a bank to take a loan to buy your house. Yeah, I mean, in the case of AAVE, you need capital. So fair enough. Like if you don't have the capital, you have a job, then it makes sense to borrow from a bank. But if you do have the capital, it's actually, in my opinion, better to buy your house by taking a loan on your AAVE position. Because the interest rate is about the same, but you don't have to pay back the capital. And over a long period of year, the government fiat will lose money, as opposed to probably Bitcoin is going to keep growing or on average.
So outside of just accumulating Bitcoin, now we're able to take very similar concepts to what Michael Saylor is doing with MicroStrategy and apply them for ourselves and use reputable platforms like AAVE or centralized exchanges to have a very similar concept. So Patrick, thanks as always for showing us the way. And if you found this video helpful, please consider subscribing, like the video, share it with your friends, and let's have a great year.